Welcome everyone. My name is Agostino. I'm thrilled you could join me here today for this webinar on how to invest in multifamily properties in a seller's market. That's certainly what we're in right now, right? What led us to this seller's market scenario? Hey, listen, we had a time when buyers were able to get cheap money and apply that cheap money to take down deals, right? Now we're in a situation here that the same buyers still want to buy stuff. Money's a little more expensive, but finding those deals right now is extremely difficult. People are sitting by the sidelines and they're waiting for the most part, for the good deals, right? A lot of distressed stuff out there too. Here's the thing though. We all know that real estate is still the best way to build wealth over time. Multifamily specifically provides that incredible cash flow and appreciation that we're all looking for. That's why we're all here, right? That's why we're all watching this training today, right? So this is one of the key things about how do you figure out how to get one of these deals. That's what we want to know. Now, doing these types of deals is always daunting. Finding the right financing can be tough, but this is why extra careful attention needs to be placed on finding the right deals and putting them together, okay? The cool thing here is that with the right strategies and the right knowledge, you can still do good deals. You have to go through a lot more of them, right? Typically before I would go through 100 before I could find one that maybe might work. That was normal, right? Now it's going to be way more than that. And I also have a great deal more competition. So what it comes down to is finding the right deals and making sure you know how to put them together, right? So before I get into it any further, for those that don't know me, my name's Agostino. I've done, there's 3 lines of business that we've been doing right now. We do multifamily acquisition, mostly B and C type of stuff. In and around Cleveland. I'm a real big believer in picking one market, getting really, really good at that market, and know that market as best as you can. More importantly, though, make sure the market knows you. It's even better if you can swing that deal. Number 2, we do development, right? So it's adaptive reuse development, and we do ground up as well, right? We do a lot of that stuff. And the third thing is single tenant net lease. So think of buying those Dollar General, Dollar Tree, Walgreens type locations. We buy it in a blind pool fund and we cash flow those. All 3 of these types of assets offer very different return scenarios. Risk-adjusted return in the case of net lease versus a little more risk with development. We de-risk the development scenario by doing adaptive reuse and by doing urban infill, right? I've done other trainings and all that stuff. You can check out the YouTube channel. We've done over 700 videos there on a variety of different topics relating to real estate, net lease, development, a whole bunch of stuff. So go ahead and check it out there, okay? If you like what you see, please do me a favor. Hit that subscribe button, throw me some love, give me some likes, okay? It helps me out, helps out the channel, helps out the team here, because every day we are working hard to provide you guys with all the training you need to be successful at this. And of course, we put it out there, right? This is totally at no cost to you, right? So if you can, do that for me. I greatly appreciate it. So today, we're going to talk about some of the insider strategies that any successful investor can use to thrive in not only this current market condition that we're in right now, but in any market condition, okay? So the topics here we're going to cover is like how you learn the difference between a seller's market and a buyer's market, how to find those hidden multifamily deals, using creative financing to get into those deals too, which is becoming the predominant way of getting deals done. And any types of tips of how to raise capital, because right now capital is very, very sticky. It's very tough to find, but with the right deal, you can still attract the right capital. All right. So that's what we're going to get into today. So let's dive in. All right. So let's get into the first thing, buyer's market versus a seller's market. Now, what is the difference between a buyer's market and a seller's market? Now, in a buyer's market, there's often more supply than demand for, in this case, real estate. In any type of market, whether there's a buyer's market, seller's market, you hear people use this terminology back and forth. It's a supply and demand. All right. You'll see if you Google a photo, you'll see there's these 2 lines, right? And the intersection is where things are balanced. Typically, when there's more supply, that means there's going to be lower cost. Right now, because the cost of capital is so much higher, there's not a whole lot of supply out there. So it's still driving demand. Of course, those buyers still have to be picky about what they're getting because the cost of capital is so much higher, right? And that's what leads me to the next thing, is that prices typically tend to be lower, right? So in this case, though, pricing is pretty much held where it was before. That margin is what we're looking for, right? Meaning that if you're buying something at say a 3% or 4% interest rate, and the asset cash flows at 7%, you're looking to collect that spread. That's what you're looking to do, right? That's how typically when you're buying real estate or buying these types of assets, you're collecting the spread. And your ability to run the asset efficiently determines how much of the spread you get to keep, right? That's what it comes down to. So in this type of market, buyers typically have greater negotiating leverage, and sellers typically have to work harder to attract qualified buyers, okay? Now, in a seller's market, there's more demand than supply for real estate. The prices tend to be much higher, and sellers have the upper hand when it comes to negotiations. And that's not where we are today. I'd say that today it's pretty much an equal type of footing, right? I remember that in some markets, you would have, like say over on the West Coast or even on the East Coast, and in like places like New York or Seattle or California, there used to be a case where if you wanted to get a deal, you had to put hard money on day one. Like you want to buy a $10 million deal, you have to slap down $100K hard day one just to be considered. So wild times, not so anymore, right? Sometimes you still get multiple offers, and you get bidding wars, right? In those types of markets, in a seller's market, right? But you don't see that much anymore, right? But here's the thing. All right. What we have to realize is that markets will fluctuate between buyers and sellers markets depending on inventory levels and buyer demand. Now, for the past few years, we've been in an extremely hot seller's market, especially when it comes to multifamily. And like I said before, two factors drove this. We had the low interest rates, right? Super low interest rates, historically low interest rates, and the buying power was still fairly good. And you also had low inventory. So we're building stuff, yours truly was doing the same thing. We're building stuff. We also had, once COVID hit, it certainly shifted a great deal of things. You had a lot of investor activity, and you had new people trying to jump into the market as well, right? Why were they doing that? Because they know that the value of the dollar continues to go down. The dollar is losing buying power, and the way you, as a hedge against this, the way you protect that work, that effort that you spend every single day converts to dollars, so those little pieces of paper. You want to protect it by putting it into a hard asset that's increasing in value. That's what you're looking to do, all right? So the combination of high demand and low supply lets sellers command the top dollar, right? So sale prices were at an all-time high, but now the market is rebalancing here, right? We're seeing that already. Interest rates have risen up significantly, and buyer demand is cooling off. Certainly a lot of people looking, but no one's actually pulling the trigger and taking the deal down, right? So now there's more inventory coming to market, though. That's what I'm seeing already. I'm seeing that now. I had someone reach out to me the other day, say, hey, do you want to take a look at this 2,000 unit deal? Unsolicited, they know who I am, they know me in this market, and that's a good place to be, by the way, is when the market knows you, like I said earlier, right? So we're not totally out of the seller's market territory yet when it comes to multifamily, as vacancy rates are still very, very low. They're still very low across the board. Rents are still rising. I mean, they're not rising like they were back before, like, maybe 12, 18 months ago. But for major metros, rents are still going up just a little bit, right? So there's strong investor appetite for multifamily assets, not only because of those two factors, but also what I mentioned before, is that many people are realizing that you have to protect your dollar bills and put it into a hard asset. So the key takeaway here is that Real estate markets are cyclical. We always know that, right? Typically, it's an 8 to 10 year cycle. That's typical, right? Historically, if you ever look at, if you go to the FRED website, FRED, right? It's the economic website. You'll see where interest rates along with recessions, and you'll see how they go, and you'll see typically it's an 8 to 10 cycle, right? A 10 year cycle. So we're going to continue moving between these periods of buyer strength and seller strength. That's normal for an economy. It's very normal for a somewhat free economy, right? Other countries that don't have an economy like the United States don't have these types of scenarios, right? They just don't. As investors, though, we want to apply the right strategies that allow us to capitalize on the opportunities in any market, not just when it's easy to find deals. That's the key thing, all right? So how do you find those hidden deals? How's that done, right? Well, in the seller's market, the deals won't be advertised on the MLS. You're not going to see them on LoopNet. You're not going to see them anywhere else, right? You have to dig deeper and get creative to find the deals. So here are 5 strategies that you can use to find those off-market deals, all right? Number 1, work with local brokers and local agents who focus on multifamily. Here's the thing, guys. Not all brokers work with multifamily transactions, whether it's small multifamily, big multifamily. Not all of them do it. Now, in the typical sense, a real estate broker is a real estate broker. They go through the same licensing, that type of scenario, right? However, what you don't know is that many of these brokers, many of these agents, they like to focus on specific asset classes. And usually, if you know who they are, they're usually at the top of the market, so to speak, in terms of their popularity, people know them, and they specialize in those types of deals and they get notoriety for it, right? So you want to try to get connected with some of those folks that are immersed in the local market, in the local scene. That's what you want to do, okay? They will likely have the inventory that hasn't hit the MLS or LoopNet or Crexi or one of these types of scenarios, right? Maybe they haven't shared it with their network of owners or their network of buyers that they typically have, right? So what you want to do is position yourself to be the first one or one of the first people, and it gives you a huge advantage to getting your hands on those deals ahead of time, right? So how you find these brokers, you typically look at Crexi, like I said before, LoopNet. You can look at other commercial websites, right? You reach out to them, and you can also look at recent multifamily sales as well. You look at offering memorandums, OMs, right? You can see what recent sales have transacted. You can look for upcoming listings. You can also attend a broker events, that kind of deal too. You can let them know that you're an active investor and you're looking for deals, okay? Now, here's the thing. If you want to know more specifically about this topic, this is a very, very big topic, all right? I have a free ebook for you, guide2brokers.com. Check it out. It's totally free. Put in your information. I email it to you, okay? It's a great ebook that goes through the specifics of what I just talked about. How do you find the brokers? How do you build credibility? How do you build a personal brand? All that stuff is in that ebook. Go ahead, check it out. It's good stuff, all right? What can you do? Number 2, direct mail and door knocking. Now, you can do targeted mail campaigns for the smaller multifamily assets. The bigger ones are a little bit tougher to do because typically if someone's going to transact a big multifamily deal, like greater than $1 million, for instance, they're going to typically work with a broker. They're not really going to work with, somebody sends them a letter or something like that. But for smaller multifamily assets, say, maybe 2 to 26 units or somewhere in that realm, it makes more sense. And of course, depending on the market, of course, it makes more sense for that seller to work with a direct buyer, right? So targeting, those targeted marketing campaigns will sometimes help, and it'll help you find deals as well, right? So you can also combine those mailers with just knocking on people's doors and connecting with the brokers directly. What you can do is you can focus on properties that show signs of deferred maintenance or they need renovation. So the owners may be motivated to sell. Why is that? Maybe they're out of money. Maybe they're tired of real estate. Maybe they're tired of the asset. Maybe the asset's too far away from them and they just can't keep eyes on it. Maybe they have crappy property management. Who knows what it is? The key thing is, though, is keeping your eyes open for the opportunity, right? And once you find the opportunity, you get into that opportunity. So with that direct contact, you don't have to compete with other buyers and get into bidding wars and things like that. But of course, you still want to make sure you have the right asset. You want to make sure you have the right asset, you underwrite it properly, you don't overpay for it, you understand what the market is and what the dynamics are and what's leading to the problems that this current owner is facing today. You almost have to assume that you can't do a better job than they can. You have to assume that. Straight up assume it. And if you do that, and that becomes your floor, then you can realize, okay, what if this is my floor, this is the best I can do, will I still make money at it? You know, when you start underwriting deals, right? You want to look at stuff like that. Now, you may also find that as you do these direct connections, you may find owners who aren't even thinking about selling, but maybe they would for the right offer, right? The key thing here, though, is that it requires a constant amount of effort. It's not easy. It really isn't easy. You can build automation to help you with the outreach here, okay? Definitely do that. Because here's the thing, you never know what's going on in people's lives. If someone's going through some sort of hardship, or maybe it's time for them to liquidate, maybe they need the cash for some other project or whatever, and you just happen to hit them at the right time, who knows? Maybe they'll give you the deal, right? Don't be stupid about your bidding, right? Meaning bid the right number. Don't throw out lowball offers or anything else like that. Because if you start doing that, you'll get a reputation of being a lowballer, and nobody wants to deal with a lowballer. All right. Number 3, look for those public records. Look at the public records for code violations. When you dig through the public records, it'll indicate motivated sellers, believe it or not. So maybe you want to look for, say, multifamily owners facing code violations or fines from the city. So the city may force the owner to repair a bunch of stuff that they just don't want to fix, or they're not inclined to fix, or they don't have the money to fix. It's going to force them to sell the property. Now, when this happens, the owner just wants to get rid of the asset. Here's the thing. If you do encounter such a scenario, that's a very different way of handling the scenario too. Like, be sure that you have all the cash to make that deal happen, that you can actually close it. And make sure that you also work with the city. Say, once you have the deal under contract, go talk to someone at the city and say, hey, look, I just got this deal under contract. I intend on fixing it. Please don't shut it down as soon as I close the deal. You know, that kind of thing. Like, work with the city. Make sure the city's aware of what you're doing, and deliver on your promise. Always deliver on your promise, especially if you're going to talk to the city about it. Okay. You can also look at pre-foreclosure notices. Okay. Sometimes the banks will often post it right on their website too. Zillow, I think, has some pre-foreclosure stuff as well. Sometimes that data is a little stale, so just be aware of that. You have tax liens, loan default notices, all those types of things are sometimes public data, you know, or you can buy it for fairly inexpensive. Owners in financial distress are likely to consider reasonable offers. Okay, so, you know, again, you want to be somewhat reasonable with your deals. I know that there's often gurus out there pushing, oh no, you picked the deal up for 20 cents on the dollar, blah, blah, blah. Yes, that does happen. Of course it happens, right? The thing is though, is that you're trying to find a decent deal. If a decent deal works and you can make it work, that's when you throw out a reasonable offer. Okay, it's got to be reasonable. You can't be unreasonable with your offers. You just can't. All right. Again, building a reputation of being a closer is extremely important. If you become a low baller in that market, no one's going to want to do business with you. They just won't. So be aware of that. All right. 4th thing, driving for dollars. Driving through the target neighborhoods, look for problem properties that can lead to deals. So these are the things you're looking for when you're looking at these deals. You're looking for peeling paint, you're looking for deferred maintenance, piles of trash, overgrown on the landscape. The owner doesn't care about the asset. They don't care about the exterior. Chances are they're dealing with a whole bunch of other stuff. Okay, so from there you can jot down the addresses and maybe look them up on the public records to see who the owner is. Try to follow up with them directly, okay, with that email campaign. The interesting thing is that they might be hiding behind an LLC. Sometimes it'll lead to a local attorney's office. You can sometimes reach out to the local attorney's office and maybe they'll forward it to the owner, maybe they won't, right? So it's kind of a crapshoot there. If they're a registered agent, that's what I mean. So just be aware of that. Okay, and 5, networking events. Okay, attending local meetups is a great way to meet investors, brokers, lenders, potential sellers. So let people know that you are looking for multifamily deals. The more people you meet, the more likely you're going to find an off-market opportunity. So creating a personal brand becomes extremely important here. Okay, so if you're a competent buyer and you can demonstrate that you're a competent buyer, it'll make all the difference in the world. Now, if you don't know how to do that, how to build a personal brand, you should definitely check out some of our training, right? If you go to multifamilyaccelerator.com or the multifamilyadvantage.com, we have two different masterminds that we go over. How do you build personal brand? How do you build some credibility? How do you land a deal? We go through all that stuff, okay? As a matter of fact, we have in our personal mastermind, we actually have some branding coursework that's coming up too. So we're super excited about that. That's the type of stuff that we cover. And if you plan on building any type of success in this business, and I said it's a business is highly reliant on personal branding. All right. Follow-up is extremely important. You have to follow up consistently with those people that you do reach out to when you go to these events. The common theme is that you're going to find deals that won't work, especially in the seller's market, right? So what does that mean? That means looking through a lot of deals, reaching a lot of people, talking to a lot of people and getting in front of them, right? It takes a great deal of effort when you're first starting off. It certainly does. It's not easy. If it were easy, everybody would be doing it, okay? But like I said, it's totally worth doing this, right? When you're first starting off, and getting into a mastermind is certainly a great way of getting the support you need from other folks to shorten that time frame so you can become successful, okay? Another way to find deals though, aside from going to meet people, I mentioned this before, guidetobrokers.com. Go ahead and check that out. I think using brokers and using those sorts of folks is a great way to get you in front of deals, all right? Let's talk a little bit about creative financing. Once you find a good off-market deal, the key now is financing, especially in our current high interest rate environment. It doesn't make any sense. Here are some of the creative financing strategies you can use to buy these types of assets. So here's the thing. You can number one, leverage bank relationships. Trying to find a lender that will give you decent rates is one way to do it. The banks are being way more selective right now, okay? There's some banks that they're not even doing loans right now unless they're a current client, right? So the banks pretty much have shut their doors. The only people that are lending right now are the folks that are lending at like 8, 10, 12%, right? So it's a tough market out there, right? So that's why earlier on when I said build a relationship with the banks, right? You want the same sort of thing. You're talking to the bank, you're talking to the bank manager there, you're building a relationship with them. And if they consider you to be a good risk on a decent deal, they may just sign up for it. Okay? How do you do that? You come to the table with as much credibility and influence as possible. So you get to know the senior bankers, you get to know the senior lenders, and you understand that their position and what they are looking for in a deal before you present it to them. You don't want to talk about, say, industrial, for instance, and they have no interest in industrial. Or you don't want to talk about retail and all they want is multifamily. Like, these are the types of things you're learning about what the lender is looking for. And if they don't match up, maybe you go to a different lender, right? Number 2, seller financing. This is probably one of the most successful ways of getting a deal today, is using seller financing, a seller carryback of some sort, because in high interest environments like we're seeing right now, this is the way deals get done. Okay, so it could be a great bridge between getting a deal closed and getting it refinanced when lending cools off a little bit and things come a little back down to earth, right? This mainly involves the owner, the current owner, remaining involved with the financing of the deal, right? So maybe they're doing an owner financing or a land contract. If you need a greater explanation of that, I did a webinar some time ago that you should check out. That'll teach you about how these two options work, okay? Two very different options. I don't want to get into it right now, but I'll include a link in the description so you can go ahead and check it out. But I talk in great detail about how these two options work and how you can use them. And many of the more sophisticated sellers, they understand how to apply these types of tools to get deals done, okay? Maybe instead of doing a lump purchase, you negotiate monthly seller financing payments. It'll improve your overall cash flow, and so it shows the seller that you're serious about getting the deal. And the third one is syndication. This is the most common option when it comes to raising money from private investors for specific deals. So in this case, you act as a general partner. The limited partners, they bring in the capital to the deal, you put the deal together, right? Syndication allows you to raise capital, raise equity for larger multifamily properties. The smaller ones doesn't work so well because the cost of overhead of all the legal that's involved, right? However, working with an experienced syndicator is extremely important in this case too, okay? Number 4, hard money loans. Now, hard money loans, they provide quick financing for acquisition based on property value rather than the borrower's credentials, okay? The interest rate is typically way higher than traditional loans, even higher than what you can get from a regular type of bridge lender, right? It's only meant to be a short-term option only until you get the permanent financing secured. Now, I've said this on previous webinars, I've said this on previous trainings, things. You have to be extremely careful with hard money. It's extremely expensive, high debt, high cost. Make sure you know what your exit's going to be before you sign on for that debt, okay? Make sure you know where the exit is before you sign on and start taking on hard money deals, all right? It's in the wrong hands, it can be dangerous. You can lose the asset, so don't do that. There's a final option is you can tap home equity. Now, with rising home values, many investors have a lot of untapped home equity. So this can be a source of down payments. People have used it before in the past. Here's the thing, tapping home equity carries some risk. So if you default on the loan for whatever reason, they can come after your house. So it's an option. People put it out there. Again, I want you to be aware that you can only use a strategy conservatively and only as a last resort because you know that this deal is a great deal. And don't make this decision on your own. Have other people come in and also look at the asset as well, look at the deal. Like if you're stealing the deal and it's the only thing you have, this is when you use it type scenario, right? And know that you can get it. Know what the exit is going to be before you put up your personal residence to do a deal like that. Okay, again, it's a very extreme option. I would rather use hard money before I put up any equity in my house personally. That's what I would rather do, right? Because typically when you're using hard money, you don't have to sign on it personally. You could just use it as an LLC in normal circumstances anyway. So they could take the house back. It doesn't impact your personal credit sometimes, right? Depends on the lender. The bottom line is that there's many ways to obtain capital, to obtain the debt that you need and the equity for these multifamily deals. So even when traditional financing is constrained. So getting creative and getting the leverage you need for these types of deals is really where it's going to be at, I believe, for at least the next 12 to 18 months. The creative strategy is the way to go when you're doing these types of deals. All right. So now let's get into raising equity. So in addition to the financing, you need to bring equity to the table. And here's some tips on how to do that. I got 5 of them for you, right? So again, I've said this before in previous webinars, tapping your own network. So you have a network of maybe high net worth individuals, you got friends and family, maybe they know people, right? building this network is a great starting point to build equity, and you're doing this way, way, way early on. You're not doing it as soon as you put eyes on a deal, I'm gonna go raise money and start now. You're doing it, if you haven't raised money for a deal today, you're doing it right now. That's when you're starting. You're starting right now, right? And you're starting to really start reaching out to everybody you know, doctors, lawyers, business owners, family, friends, anybody that you think might know someone that has access to capital and is interested in real estate. If you want to know more about how to do this, again, it's a huge topic. You can go to guidetocapital.com. I got a free ebook there. It shows you everything on what you need to do, what you need to say, even have scripts in there on how you can use that information to go raise capital of your own. Okay, and I talk about all these things in there. So go ahead and check it out. All right. So what you do is you offer them a preferred return to get them interested in the deal. Maybe give them equity in the deal too, right? That's typically what we do anyway. And it's got to be tied to a track record of some kind. Like I said before, if you don't have a track record, try to partner up with someone that does and let them in the deal and leverage their track record for success. And that'll help. Hopefully you find someone that's really good, strong. That's what you're looking for, right? Bring them into the deal, and that credibility will rub off on you, and then you can get the deal closed and get it over the line, all right? Number two, you can connect with local real estate clubs, right? So those RIAs, right? Real estate investment associations and property clubs as well. So get involved, build a relationships with other investors. Maybe those other investors can eventually become your partners. And you can also let those members know that you're raising equity for deals too. So other investors may be interested in providing capital for the right deal if it makes sense to them, okay? The third thing, social media. Listen, social media has its pluses and minuses, right? But social media platforms allow you to reach a large pool of people with very little effort. That's the cool thing about it. You know, consider creating a profile to document your experience, your portfolio, what you're doing, how you're doing it, because people invest in other people, right? They invest in deals, of course, but they also invest in people. If they like what you have to say and you resonate with them, they'll sign on for you, okay? So maybe you can post about your new deals, post about the equity needs that you're looking for. Well, maybe you could post about new deals, things you're working on, but the better quality of the content you share, the more credibility that you build, okay? And number four, promoting industry events. So there's many, many real estate and finance groups around here, many conferences, maybe attending them, see if you can get a speaking arrangement with them as well if you're really good at speaking and you have a track record, okay? That's the key thing, is trying to build a tribe around you, right? That's a real big thing they're trying to do when you're putting these deals together, right? Again, when you're starting out, it's going to be hard to do, right? But at least try to take down some deals. And no matter what, there's always a crowd of people that are looking for guidance and help, no matter where you are in your journey yourself, right? But by doing it this way, you can organically meet hundreds of investors and let them know what you're looking for, and maybe they'll come along the ride with you, okay? And number five, build an investor database. Maintain an organized database of past, present, and future potential equity partners and investors. Stay in regular communication with them. Tell them about your deals. Tell them about performance. There's free stuff like MailChimp, right? MailChimp is totally free. It almost acts like a low cost or even free CRM. You can track all this type of stuff in that system, okay? It's a great way to also maintain contact with them. You can send out quarterly updates to them, share deals with them, invite them to events. A nice clean database helps you tap those investors when the timing is right. So raising equity requires building reputation as a knowledgeable investor and becoming a person that people want to work with. So you have to leverage all the platforms you possibly can to expand your network. That's really what it comes down to. So again, if you want to know more about how to do this, guidetocapital.com. Check it out, free download. I talk at length about all this, okay? So those are my top strategies for investing in multifamily during a seller's market, especially when inventory is constrained, okay? So the key takeaways: markets fluctuate between buyers and sellers' strength, okay? So you have to be ready to act in any type of condition. That means pulling back when necessary, and then when you think it's ready, go ahead and go hard, all in on trying to find the right deals. The deals that you're looking for are going to be the hidden gems that are found through targeted networking, marketing, and prospecting, okay? In times like this, especially in times like this, getting creative with financing is going to be key. So using the relationships, using seller financing, syndication, using different lending tools like hard money might be a way to go. But expanding your network to help raise equity is going to be a key factor, no matter what you're doing, no matter what the market is doing. Raising equity is still going to become key. It always will be. And people like themselves, build trust with them and let them know that you can deliver on the promises that you make. All right, that's huge, okay? So the companies that succeed at this, they work smart. They don't work hard, they work smart, okay? And they use these strategies, the ones I just outlaid right here, right? To uncover and fund great multifamily deals, no matter what the market's doing. So that's all I got for you today. If you'd like to connect, feel free to reach out, okay? Bulletproofcashflow.com. There's a link on there. You can set a time. If you want to talk about investing in deals, for instance, you can certainly do that there. If you're looking to really make it in the multifamily space, multifamilyadvantage.com. I have a video on there explaining a lot about what we do, how the program works. But like I said, it takes effort to put these deals together, and it takes a group, it takes a team, especially if you're starting out. Because if you're trying to do this yourself, you're going to have a hard time, and you're going to lose motivation. Listen, we all do, The way you get around it is to go and partner with other folks, even if they're your support group, to help you get a deal over the line, okay? And in our team, in our mastermind, we're all there for each other. So if you're interested in checking that out, go ahead, go check out multifamilyadvantage.com and talk to one of our folks. And we can help you get into the multifamily game, all right? That's all I got for you today, guys. Thanks for tuning in. I'll see you next week, all right? Take care.